John Payne, the author of Swine Times, our guest today. And John, let's talk about the lean hog market. Obviously, we've had a pretty decent run in 2021. What's your outlook for next year?
Well, the game plan really is probably take what we did a year ago, which was bottom out the carryout, bottom out the cutout at the end of the year, and then as the springtime rolls around, we catch a nice tailwind of demand. Hopefully some Chinese buying interest shows up, and we see that June contract north of $1. It is already priced pretty high, so I think a lot of that story is factored in. But I think as we get into the new year, I look for that index to perform a little better. I know a lot of folks I work with are looking to bull spread here. They want to get long the curve specifically because producers aren't making money at these prices, so you'd think they'd shrink their production. But I don't know. It's a question of feed needs. It's a question of what China's going to buy, and then I think this California law that specifically could go into effect here at the beginning of the year. That's a wild card. I don't even know how to interpret that from an economic standpoint.
How cloudy is the outlook of China buying? That's been really the major driver here over the last year and a half, thrown on top of this overall pandemic demand. But what is that picture? Do we even have any idea what it's going to look like?
Well, I think you have to take it from the global monetary policy perspective. Okay, China's been growing at like 3 to 4%, depending on the numbers you trust, which is record low. I mean, going back to the 90s, they were growing 10, 12, 13% a year. And they've slowly brought that down into like the 7 or 8% levels back before COVID. But China has been the last country, and they haven't done it yet, to quantitative ease, meaning print money to pay off debt. And a lot of folks think that is starting now. They've made some moves last week to weaken their currency. And as the U.S. comes out of COVID, strengthens our currency, we look to China to go the other way. That would increase demand for all commodities, all goods, because growth in China will be going up, which means more food, more mouths to feed rather. So if you're taking it from that standpoint, I think Chinese imports are going to pop here. They've been lagging a little bit over the last couple of months, but I think the big question will be, where do they come from, here or Europe? When you look at the boycott talk we've been having around the Olympics, I think the U.S. is probably more likely to win that business. But in the near term, I think it's still a market that should perform. The quarterly hogs and pigs come out next week. That'll be a big factor into near-term price action.
All right. Well, we'll keep an eye on it. Thank you so much, John. Appreciate you being here on Ag Day. We'll be back with more coming up in just a minute.
To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.